Have you wondered why the shares of HDFC Bank, one of India's largest private sector banks, fell over 5% today? It all began with a 7% slump in the bank's US-listed ADRs overnight, setting the tone for what was to come. The bank's October-December quarter results, while meeting the headline expectations, threw a curveball to investors who dared to look under the hood. Yes, the profit rose by a third year-on-year to Rs 16,372 crore in the third quarter of the financial year 2024. But wait, there's a twist. This figure included a one-time tax rate gain, which is not a routine boost in the bank's earnings. This detail, coupled with the less-than-expected growth in net interest income and a sharp rise in provisions, sent the investors into a tizzy. On the day before the Q3 results were announced, shares of HDFC Bank ended marginally higher, but the tides turned quickly after the results were out. Now, let's delve into the details that led to the slump in HDFC Bank's shares. One of the key factors that unsettled investors was the bank's net interest income growth. Despite a 24% on-year increase to Rs 28,470 crore during the quarter, the figure fell short of street estimates. This shortfall sparked concerns about the bank's ability to generate revenue from its core operations, thereby spooking the market. Another element that raised eyebrows was the whopping 50% rise in provisions, amounting to Rs 4,216 crore. This suggests that the bank is setting aside more money to cover potential losses on loans, indicating a potential increase in risk in their loan portfolio. This revelation further fueled investor anxiety, casting a shadow over the bank's future prospects. The repercussions of this disappointment were felt even in the international market. The US-listed shares of HDFC Bank took a substantial hit, dropping by 6.7% on the New York Stock Exchange. This marked the biggest single-day drop since April 2022, reflecting the widespread concern among global investors. The impact of HDFC Bank's slump was not confined to the bank alone. Due to its considerable weightage on the Nifty 50 index, being the highest among the constituents at 14%, any weakness in HDFC Bank could influence the performance of the overall index. This ripple effect underscores the significance of HDFC Bank in the broader market landscape. Lastly, the asset quality of HDFC Bank also took a hit. The bank saw its non-performing assets, or NPAs, increase to 1.26% in the third quarter of fiscal year 24, up from 1.23% last fiscal. Although the net NPA dropped slightly, the increase in gross NPAs is a worrying sign, suggesting a deterioration in the quality of the bank's loan portfolio. Even the asset quality of HDFC Bank took a hit, with an increase in non-performing assets. These disappointing details collectively triggered the slump in HDFC Bank's shares, painting a cautious picture for the bank's immediate future. How has HDFC Bank performed over the past year? Let's take a closer look. Despite the recent slump, the bank's stock has managed to gain over 5% in the past year. This performance, however, pales in comparison to the benchmark Sensex, which surged a whopping 25% in the same period. Perhaps one of the most notable milestones for HDFC Bank in the past year was on July 3, 2023. On this date, the bank's shares soared to a 52-week high of 1,757 rupees each, an achievement surely worth celebrating in the roller coaster ride that is the stock market. However, it's important to remember that the world of finance is filled with ups and downs, much like the thrilling peaks and valleys of a roller coaster ride. This past year has been no exception for HDFC Bank. As we can see, HDFC Bank's recent performance has been a roller coaster ride. So, what is the takeaway from HDFC Bank's recent performance? To encapsulate, we've seen a dip in the bank's shares by over 5% on January 17th. This followed a 7% tumble in the US-listed ADRs after the bank's October-December quarter results. Although the results met expectations on headline numbers, they left investors feeling underwhelmed when they took a closer look. We've also noted that the bank's net profit rose by 33% year-on-year in the third quarter of the financial year 2024, but this included a one-time tax rate gain. There was also a significant increase in provisions, as much as 50% to over 4,200 crores. Over the past year, the stock of HDFC Bank gained over 5%, but this pales in comparison to the 25% surge in the benchmark Sensex. While HDFC Bank's short-term performance has seen a slump, It's important for investors to keep an eye on the long-term trends and prospects.